Hi everybody, and in today's video we're going to discuss Tesla stock and the performance of the company and overall my opinion on it. This is not an investment advice. I don't care will you be buying based on this information or selling. This is completely up to you. But this is the most recent update that I will be providing today, and my hunch on this is that this company is not paying dividends, so I'm not very much interested in it. But I usually prefer companies who are paying dividends. This is the list of companies I'm investing in, but this is my overview on Tesla. So overall, what is outstanding here is the drop that the company is having. So any company that is having this drop cannot be stable overall. Okay, but we all like it. We all think that EVs are the future. People will own electric cars, not the ones that consume oil or gas. But overall, look at this PE ratio. I mean, look at the Coca-Cola, which is considered to be heavily oversold. Look at the Pepsi, for example, that's considered to be oversold. Look at the producer of Oreo, which has like a tremendous growth over the time, which is very stable. And look at the PE ratio that this company is having. Like, this is nowhere near, these prices. So which means that this company is heavily oversold. But you also see this growth opportunity, right? So we all believe that this company is going to earn a lot of money, that there will be a lot of things, connected to Elon Musk, and that, this stock will grow overall. But, look at this forward PE ratio that the company is planning. I mean, and look that PE ratio that this company is having. So sometimes I don't understand, some of these decisions people are making, again, hoping that Tesla will continue to grow like thousands of percentage points, per year and so on. But again, up to you. If you think that this is relevant, you should invest. But let's go further than that. Let's basically conclude that PE ratio is extremely high, it's not competitive at all, that this company is oversold, the price is not relevant. But since the PE ratio is planned to be doubled, let's forgive this to the company and let's assume that it will happen this way. And the investors will continue to have to see this forward PE ratio being even less and less over the time. So let it be this way. But look at the margins that this company is having. 26 to 15%. And this is the biggest weakness that I think this company is having. Because even with this tremendous, growth ratio in sales and everything else, the margins are kept relevantly low. And if you look at the companies like Mondelez, right, that they are making $3 billion in profit, and Tesla is making in income, 11 billions. So again, that it looks pretty comparable, I would say, to one another, and in perspective, of course. But overall, I don't see that much of a benefits when it comes to profit margin and net income that this company might be making and giving in return to the investors. So that's, again, my estimation, because even Mondelez is paying 2.3% a year to the shareholders, and it can still produce 33% growth year over year with pretty decent level of sales. And it looks to me more or less aligned with Tesla overall as the business at this point. Again, some people are saying that Tesla is doing the buybacks and quantity of shares is decreasing on the market. But look at this quantity of shares outstanding. Like, if you think that the company is decreasing the quantity of shares and benefiting the shareholders, like, I don't know. Maybe I am looking at the wrong stats. Please share the correct link in the description, because what I'm seeing is that the company is issuing shares more and more. There are more and more shares in the market, months over months, quarter over quarter. Nothing changes. There are just more shares on the market. Also, we can see that insider transactions are pretty high, which is why Elon sold, a lot of shares, because he needed money for Twitter. But you can overall understand that there is a lot of shares on the market, and this quantity has increased massively, just massively without any reason for that, which is also a very big hit for the company in the long-term perspective. So if you are thinking to sell it like in 6 months, to sell the stock, now you need to wait longer, because that will take time for these shares to be absorbed by the market and finding more investors, in these recession times. Then let's look at the Tesla debt to equity ratio, and the numbers look pretty great. That the company has decreased long-term debt. It's only 2 billion, and it's less than 0.1. That is like an awesome and fantastic result. Okay, so this is the fantastic result, and we can basically forget about debt that this company might be having or some issues. So the company has a lot of opportunities to start loan. I think that the company will be increasing debt over the next 1 or 2 years, because that's the only way how a company can show growth without any specific reason for that. And again, people will not care about it because debt to equity ratio is pretty low. If we look at the analyst estimates, that is one of the biggest reasons why I don't invest into this company, just because I consider it the same way as most of the analysts are looking at it. So the results are pretty great. Actuals are above the expectations or close to the expectations, except for Q3, where you can see that the deliverables of the company were relevantly lower than they actually were back in the days. The current price is $123. But what is really concerning me is the low estimate. So if you remember, in case of Citigroup or Cisco Systems, the lowest estimates was less than 10% from the current price. So with the Tesla example, we have almost 40% difference, where analysts might assume that the company can reasonably go 40% lower from the current price, which is a red flag to me. I think that a sustainable business cannot go that low, because usually if the company is great, the other institutional holdings and stakeholders will start buying this company, getting their share price to somewhere closer to the actual. But again, this is the company of dream, right? So the high price is like 3.5 times more than what the current price is. But again, if you see it this way, it might happen in the future. But again, I am like to be more on the safe side. And the last point that I've heard most of the investors and dreamers believing in Tesla say is that they have a wide network of chargers across the US. So this is why they're gonna always be the leader, and so on and so forth. So let me show you one thing. Let's think of it more from an investor perspective, and let's talk about money. So 1 kilowatt hour in the 1 kilowatt basically costs $0.2 in the US. Let's take just average 0.2. Let's even increase it from the current ones. And you can see that those are the most recent numbers. So let's take $0.2 per 1 kilowatt. And the battery of Tesla has 100 kilowatt hours lithium ions. So let's just do a simple math that in order to charge Tesla one time, you need to pay $20 for the electricity in general. So let's get back to the company's profit margin. So can you charge people $20 just for the cost of service? Definitely not, because then it will be like insane, like 50% profit margin on one charge. Let's take an average of 15% as well. And what do we have then? $3. I mean, really, you are gonna tell me that this company is gonna earn another 50 billion in sales just by providing people, one charge for $20? I mean, I think they can earn like, the cost of one cup of coffee, like $4, but again, they cannot make a ton of money on this. Maybe they can be, the largest seller of electricity to the car owners. But again, think about iPhone as well. iPhone is not making a lot of money from the phone charges that they have, even if they have the best one in the world. And now you can see with the new standard, Type-C is actually replacing Apple from being one of and the only seller for this device. So maybe the same will happen to Tesla. So this is why I don't believe that Powerwall or anything like that will contribute highly to these numbers. It's a car manufacturer, and we should be honest that other businesses are really great. They also contribute to this. But are you actually saying that these numbers will be reached by chargers? I mean, I think that at some point Tesla will have universal chargers, and that is not a perspective of having whole world using only their chargers. That's just impossible to my view to reach. But again, up to you. If you like Tesla, feel free to invest in it. The company might have a bright future, and you can sell their shares in the future more expensively. Maybe over the 5 years as you watch this video, you will think that that was not a good advice. But again, this is not an advice. This is the worst investor, and it's up to you what to do with your own money. Thanks for watching.